Despite global risk aversion, the benchmark stock indexes managed to cement the gains of last Friday. The major stock indexes received a boost from an unexpected source. Commonly, Fed policymakers discourage stock investors with their hawkish rhetoric. However, on Monday, they arose to hope that the central bank could wind down the cycle of monetary tightening. Curiously, Wall Street indexes closed in the green despite the gloomy geopolitical picture and the steep fall in a few sectors. The S&P 500 rose by 0.63% to close at 4,335 points. The benchmark stock indexes traded sluggishly for most of the New York pre-market. The indexes accelerated their rise before the opening bell. The S&P 500 index is expected to extend its growth in case it climbs above 4,357 points. The conflict between Israel and HAMAS fueled a rally in the energy stocks. Besides, dovish rhetoric of Fed policymakers helped the heavyweight companies reverse from their previous decline. As a result, investors shifted focus from geopolitics to domestic issues. Fed policymakers said on Monday that yields of short-term U.S. Treasuries, which make a direct impact on funding costs for households and businesses, could prevent the Federal Reserve from further rate hikes. Policymakers stated in their forecast last month that one more rate hike would be needed until the year end. Nowadays, the Fed Watch tool shows that the likelihood of a rate increase at the nearest Fed's meeting in November sharply dropped from 27% to roughly 14% after yesterday's remarks. The chance of a rate hike at the meeting in December is now seen at 24% versus 36% in the previous forecast. On Tuesday, futures on the U.S. stock indexes retained the moderately positive dynamic because yields of U.S. Treasuries went down after the cautious comments of U.S. speakers. We should not forget that geopolitical jitters still persist. Today, the market is anticipating new signals from other Fed policymakers. The economic calendar is empty today. A flood of economic data will be available on Wednesday, such as the Fed's minutes of the latest policy meeting and a report on the U.S. factory inflation. More data is still ahead until the end of the week. Investors could remain in the wait-and-see mood for the whole New York session. Market sentiment could depend on the comments by Atlanta Fed President Raphael Bostic, Minneapolis Fed President Neel Kashkari, San Francisco Fed President Mary Daly, and the member of the Board of Governors Christopher Waller. The positive sentiment could be reinforced by a meeting of the International Monetary Fund where speakers are likely to praise the power of the U.S. economy. Though the IMF downgraded its forecast of economic growth in China and the Eurozone, it maintained its forecast for the global economy unchanged. That will be driven by the amazing strength of the U.S. economy. The lending institution upgraded its forecast of the U.S. economic growth for 2023 and 2024 by 0.3 and 0.5% respectively to 2.1 and 1.5% on a year. The currency market is trading cautiously today. Fed policymakers downplayed the US dollar's luster on Monday, and this sentiment spread over to the European session today. The US dollar index slipped to 105.90. The instrument is expected to trade in the intraday corridor between 105.70 and 106.30 points. The quiet trading intraday is explained by the fact that traders are looking forward to the Fed's minutes of the latest policy meeting, and the document is due on a Wednesday. The Canadian dollar has lost some of the gains of the previous session. The USD CAD pair was trading at 1.3600 before the opening bell in the United States, and the currency pair is making efforts to make an upward correction amid a decline in oil prices and the positive dynamic in the stock market. The instrument could rise to 1.3640 if the situation worsens again, which is a realistic scenario. The USD CAD pair may reverse downward and fall to 1.3500. The loonie might find support from a new rally in oil prices. The crypto market is trading in the red on Tuesday, though crypto assets are making more modest losses than yesterday. Bitcoin shed 0.6% ahead of the North American session, trading at $27,340. As for the intraday outlook for Bitcoin, the price approached 27,350. If the token manages to hold this level, it will be able to rise to $27,750 and $28,000. Alternatively, the crypto could decline to $26,650. Today, the crypto market mirrors global risk aversion. Despite a sell-off of most tokens, Bitcoin is holding the upper hand. Robin Linus, a Bitcoin developer, introduced the concept of BTVM in a white paper called BTVM Compute Anything on Bitcoin. Potential applications of a BTVM could range from gaming to verifying proof of validity of a Bitcoin contracts and even connecting Bitcoin to other blockchains. We hope that our market review will help you understand ongoing market dynamics. We are always open to your questions and offers. Make profits with the InstaForex and see you online tomorrow.